Buying a home with your partner. It can be super exciting, and quite often you don't think about all the things that can go wrong down the track. So today we're going to take you through all the things you need to know about buying a property and how it should be structured so it's best for all parties involved. Let's dive right in. So you're looking to buy a property with your partner and it's super exciting times, and everyone doesn't want to talk about the worst case scenario, that what happens if you break up and I put more deposit in than you, what is going to happen? I've recently had a couple that this has happened to. At the time, they were super excited to buy their first home. They were both contributing a total deposit of $100,000. She was putting in $75,000, he was putting in $25,000. Unfortunately, 3 years down the track, they decided to split and wanted to break up and have the property sold. The property price actually reduced. Initially, when she put in the deposit, it worked out to be about 75% of the purchase amount, him only putting in 25%. This meant, on paper, she thought she had a higher ownership in the property. In actual fact, the solicitor had set up the title ownership to be 50-50, tenants in common. This meant when they sold it, as they were a de facto relationship, the funds were split 50-50 equally. So you might be thinking, how can you avoid these mistakes and this happening to you? The first tip is to think worst case scenario. It's a hard conversation to have with your partner, especially at the time of buying your dream home, but it is worth mentioning. So if you're in a de facto relationship or even married, a binding financial agreement is usually a good starting point in which all parties can put on paper the amount in which each party is entitled to in the event of a separation. Especially in that example we talked about earlier, where one party is putting a significantly larger amount of deposit, it is worth mentioning about thinking about the title setup. There's two ways you can set up the title. One is joint tenants, and two is tenants in common. Joint tenants means there's a 50-50% ownership in the property, which is a default, meaning that you both own half of the property. Tenants in common, on the contrary, allows you to choose the amount of ownership each party is entitled to. So in that example we talked about earlier, the title ownership could have been structured 75% in one name and 25% in another name. There are some other ways you can set up the lending to be in a favorable light for both parties. So in this example, where there's a 75% ownership for one party and a 25% ownership for the other, you might set up the lending so that the loan is set up separately. Now, pending the bank you look at, most banks will set up the lending as joint and severally liable. What this means is that if there's two loans that are set up, both of you are responsible for both loans. Even if you say, this is my loan, this is your loan, I'll pay mine, you pay yours. Luckily, there is a way around this, and you can cross guarantee each other, effectively meaning that you have 100% ownership in your loan and the other party has 100% ownership in their loan. This is known as property share and is extremely popular for couples looking to get that loan structure that meets their requirements of how they want the ownership to reflect. It's important to think worst case scenario. I know, especially in a time which is very exciting, it can be hard to think long term about worst case scenario. As mentioned before, a binding financial agreement is a great place to start. It gets everything in writing. You would need the assistance of a solicitor, so make sure you get proper legal advice to make sure it all stacks up. The second is consider the title ownership. If one party is putting a significantly more deposit down, does that change the ownership of the property? That's a good conversation to have with your partner. And the last one is consider how you're going to set up the loan. Are you going to be joint and severally liable? Did you want to have a portion of the loan each individually responsible for? These are all things to consider. Here at Hunter Galloway, we specialize in these scenarios, so feel free to hit us up at huntergalloway.com.au. And as always, thanks for watching.